Testing. Good morning, everyone. Good morning, good morning. Hey, Moran, how are you? How was your weekend? Lazy? Oh, that's good. Hey, Raj, Travis, everyone have a good weekend? Good, good, good. Okay, so today, hey, what's up, Dave? Start off by showing you. All right, I'm still on the old contract. I rolled it over and I'm looking at it. So I will be using, so just to be clear, I'll be using the old contract this morning. If you look at the, well, where'd it go? If you look at the volume in the old one is 58,000 contracts. The volume in the new one is 43,000. As more people roll into the new contract, that number will go up. And probably by the end of the day, the volume in the new contract will surpass the old one. Okay? There's a detailed video on how to roll over the contract. My video also has the business reasons as to why I roll it over the way I do. Okay? So instead of speculating and making mistakes, just watch the video. It's really simple, right? I show you how to roll it. I use a volume-based rollover. It's back adjusted. Okay? And what's the other thing here? It's a continuous futures contract, volume-based rollover, back adjusted. The reason why I use a volume-based rollover is we're volume-based traders. All of this market is an inventory-based market, so volume is important, right? Continuous contract and back adjusted. It's just simple. It's easy. So what I do is I go and I roll it over. This is the old one, for example. So here's the new one, and I'll go and I'll adjust the balance zone. So the new balance zone is 56.75 to 57.54 and 3/4. The old one is about 52 points lower. Okay. Once again, really simple. There's no reason to overcomplicate this process. Okay. The old levels, like 60, 65, you don't change those. They'll work. Hey, Cryptomania. What's your buyers? I don't have any buyers yet. I got nothing to sell yet. How you doing? Hey, Willie, Cryptomania, how you guys doing? Cryptomania is asking me what my buyers are. And I'm like, I don't have any buyers. I don't have anything to sell yet. The market's up today. Why is the market up? Right? Well, yesterday, what did I tell you guys before Globex opened? I posted in the room that the low target was 59.40. We went down to 44. We didn't take out 40, and what happened? Rotation back up. Okay? That area here on the old contract, at 59.30, that's where the shorts are trapped. They're front running because why would they front run today? Because time. There is a time. You have to roll those contracts, right, this week. So if you are short, you want to get the cheapest possible pricing, right? And if you have to do that in the middle of the night, you do it in the middle of the night. So all the cheap supply under 59.60 is gone now, right? Now we're testing 6,000 as the market is rotating higher. I imagine we're going to find some resistance here, right? The bottom of these profiles, the top of this value area, right, from Friday. I imagine that's where the sellers are going to step in. We'll go take a closer look at the chart. So now, contract rollover, the market's acting a little different today. Okay, there's something to be aware of. One thing is J period. J period usually corrects inventory lower. J period opened, went 3 ticks down, and moved up. What does that tell you? Now, for market profile traders, you're at a disadvantage. If you're not trading market profile, you're at a disadvantage with this one particular thing, right? There are a couple of things that market profile help you with. Single prints, poor high, poor lows, and knowing where the cost basis is instantly. The other thing is when a certain period that usually corrects inventory lower, when it bids and moves higher, it tells you that there is a bid here. Right? Do you see that? There's a bid here. That's short covering because of the contract rollover. Okay? It's pretty simple, right? There's no macro reason for it. It's very simple. It's a mechanical reason because of the inventory, right? So people who are short and bid to cover are pushing the market higher so they can roll from one contract to the next. It's simple mechanics. Don't overcomplicate it, okay? So when J period corrects inventory higher instead of lower, the market is trying to tell you, and what's now the practical information from that, right? Because a lot of trading and a lot of traders, there's a lot of, people love to talk fancy and they love to pontificate, but what is the actual practical use of that? The practical use is don't short it, right? Pretty simple. Right? If you see J period open and fail to take out the I period and fail to take and to get down here, that means that there are bids and the market's going to go do this. So don't short it down here because you're going to get stopped out. Right? Pretty simple. Right? Pretty simple. Once again, ladies and gentlemen, we like simple, common sense methods of doing business. Right? Like you'll see people with 16-page trade preparation and all this stuff, but it's all useless when you're actually trading. Just all you got to know is where the bid is. Right now the bid's at 59.92. Right? Pretty simple. This is the old contract. Okay? So now let's go find ourselves a nice balance zone. Right? It's probably the balance is somewhere in here, 58.60 to 91. Sorry, 59.86 to 91. Right? Everybody always wants to complicate it so they sound really smart. Right? And that's cool. But it's not going to help you make any money. How do you find the bid? Just, yeah, exactly. On the half-hour candles, right? Where if you look at the low of this candle, if this was a candle, right? The TPO chart is just a fancy half-hour candle. That's all, right? So this is a half-hour candle. The low of this candle can't take out the low of that candle, right? Presto, bid, right? There's the bid. There's the overnight bid. That means traders have orders in here. You don't need a DOM or any fancy software. There are buy orders. Market's rotating higher. Sweet dreams, Billy. Have a good rest. We'll see you in the morning. Get some rest. You'll probably need it. Just gonna see if these lows are any better. There's a nice balance zone. Look at this, right? That's that two-sided trade I'm talking about. The sellers are here. They stop selling here. Market, it looks below and fails. It goes to the top. Looks below and fails, right? So you can use that as a balance zone. Let's see if I've got the lows correct. One sec. We're just putting a new high. We're in distribution right now. Be sure I get a nice balance zone working here. That low, that high, that low, that high. There we go. Real simple, right? It's just two-sided trade, right? So now you have a cost basis. You take that cost basis and you double it. This is the profit zone, right? And if it breaks above that profit zone, you just double it again, right? Hillbilly math, right? Real simple. So the top of our 4 times profit zone is 60.20 and a half. There you go, right? Then we go and set VWAP. What I do is I set VWAP right here, right? That's where I anchor my VWAP. It's at the Globex Open. You can anchor it wherever you like. I like anchor it where everybody does, right? So you'll see exactly where. So VWAP's here, 59.81. We've been above it the whole entire session, right? So we've got nice distribution of the product that we took in cheaper. And there you have it, folks, right? It's simple, right? We do the same thing every day. So you can, oh, geez, these stupid lines. Um, we do the same thing every day. So you have a method, right? We look to see where the inventory is. We look to see where the buyers are. We look to see where the sellers are. We mark off VWAP, and then we go to work. We just sit and watch now. Simple, right? We wait for our trade setup, and when our trade setup appears, we take the trade, right? Hey, Jerry, how you doing? You had a good week last week. Let's keep that going. Sorry, I didn't have my balance zones done before, but now you can at least see how I do them. You can see the simplicity of the whole thing. 5 steps every day to do the same thing. You have a way of doing business that is repeatable and is scalable, right? Our basic trade that we take is the look below and fail. It's based on the oldest business principle in the world. Now let's see where the sellers are, right? Because right now we're trend up. We don't know where the next seller is going to be, right? It could possibly be at the J high from Friday at 60.14. Well, that's a ways away. So I'll just mark that for now, right? We're kind of in no man's land right here until we find an active seller. Okay? No single prints in the overnight, is there? Nope. Just good old-fashioned distribution. Hey, Only Flow, how you doing? Hope everybody had a good weekend. So remember the contract, or sorry, the volume in this market is now being split between two contracts. So remember that when you're trading, when you're looking for follow through and those kinds of things. It's just something to be aware of, right? And the other thing too is it's just me because I always tend to be overcautious, right? But long at 50 is nice. Um, don't go balls to the wall crazy on a new contract until you kind of know it a little bit. Scalp around, get to know it. Yeah, you're joining us late, Jury. I'll be on the new contract in RTH. By RTH, the volume should have caught up. Yeah, it usually makes it a choppy, slower market. It's actually surprising that we've got this much movement tonight, John. But I've been saying for months now that there's some people that are really short. So it's kind of being proven tonight or this morning, you know? The more short a market goes into things like rollover, month end, quarter end, year end, it'll show. It's just people aren't used to looking at the chart and getting information from the chart. They're trying to put their opinions on the chart. And they're always trying to force what they think is right on the chart and trying to make the chart confirm what they think is right instead of actually letting the chart tell them what the hell's going on. Right? It helps if you just kind of let the chart tell you what the heck's going on. Makes a bit more sense. And that's really key going into this next quarter. Um, yeah, and probably for the rest of the year, maybe even for the next 4 years, you really want to let the chart tell you what the business is doing because that's what it's doing. If you look at a stock and they'll say the greatest things in the world about the company, and then you look at the stock and the stock's doing nothing but going down. But there's a lot of hype about it and people are buying it. Well, the chart of a stock is like a health chart in a human being. If the chart's doing nothing but going down and it's going down on volume, it means somebody's adding supply to the market. It's really not frickin' rocket science. It's not like we're trying to figure out cold fusion. So when you see dilution, no matter how well the company's prospects are, unless you're buying it for 20, 30 years and you're going to hold it, if you're in a swing trade and you're using macro and the chart's telling you this is a sick company, there you go, right? It's all about structure. If a company is loosely structured, the stock will fall apart. If a company's tightly structured and the stock of that company is tightly controlled by the insiders, it'll move up nicely. It's pretty simple. You go to overcomplicate that process, you'll just end up chasing your tail. This is a short covering move, John. As I said, you might have joined us a bit late, right? This move is so that the people who are short the old contract can cover before they have to roll over into the new contract. That's why this move is a bit more convincing because we have more people. Like I was saying, when J period didn't go lower, that was a bit of a clue, right? It's a clue that's telling us there's quite a bit of buying. Because let's put it to you this way, folks. Who the hell is going to buy at 3 o'clock in the morning size to go long? No one, right? This is short covering. So it's okay. It's a tradable move, John. That's so you're right there, right? Yeah, we tested our, do a little test trade. Bought a little bit at 2 3/4. Put some offers out. See if it goes. I'll have to take a look a little later, Jerry. It's Here's the thing about levels, Jerry. I have no idea what's going to happen until we get there. But what you want to do is you want to take a look. See that big red candle that came down? Right? At the top of that red candle is where you're likely going to see sellers. Right? So I'm not going to be able to tell, like, if it's like asking me, JJ, what do you think here? Right? If you said, JJ, what do you think about this level for a look above and fail? Right? I'd say great. But I'm not going to do anything until we get there and see how it reacts. You know what I mean? Does that make sense? Level looks good. Yeah, just wait to see how it reacts. Because here's the thing, if it's at 4 times cost basis, then it's likely to have a little bit of a sale, right? Just think about it. If you're selling TVs, right? If you're selling TVs and you paid, I don't know, $100 per TV wholesale to your wholesaler, right? And you're selling them at 400 a pop, you run out of buyers at 400, you might have to put them on sale, right? That's the basis for the look above and fail. We looked above, couldn't find any buyers, had to put it on sale. Like when you talk your way through the trade, then it makes sense, right? Does that make sense to you? Whatever you're in doubt, talk your way through it, right? And don't do all that Twitter speak where you're talking about nonsensical things, right? Like unfinished auctions and I need to go to the bathroom, unfinished business, right? If you bought it at 100 and you're selling it at 400 and you run out of buyers, you might have to put it back on sale. So that's that 4 times cost basis, right? So that's you look above, where are my buyers? There's no buyers up here. Let's put it on sale and see where we find buyers. Oh, there's buyers here. Stop selling and raise price. See if they'll come in and buy it. If they don't, keep lowering price. And also remember, you're not the only knucklehead out there selling, right? Everybody else is selling too. So you have competition. So when you have competition amongst sellers, that's when you get a move down. It's really simple. Nobody ever talks about it because nobody ever knows about it. Because most people who are in the trading thing, they don't trade size. And when you don't trade size, you don't understand. And even a lot of size traders don't talk about price competition. It's almost like a little secret that they keep to themselves and they don't want retail to know. Right? But if I've got 5,000 contracts to move and you get in my way, I will run you over without a second thought. And that's another thing that I've been thinking about a lot is that screen-based trading, a reason why traders had trouble with it when they transitioned from floors is because there's no sense of urgency, right? All you see is price moving up and down. You don't know that there's an actual business going on that's moving that price, especially if you have never worked in the business. There's no sense of urgency. If you and Bram Jury were standing next to each other and you went to sell at $5 and he went $4.99, you'd push him out of the way and go $4.98. Now, why is that? And all retail traders go, well, why don't you just sell it higher? Because somebody's selling it in front of you and taking your customer. You got to think like a merchant. When you're long, you are a seller. When you're short, you're a buyer. Write that down. Put that on your desk. Right? If you're long, it means you have an inventory of product. It might only be one contract, but you need to sell that contract at a profit. If somebody undercuts your price, they eat into your profits, and you have to get rid of that inventory. It's very simple. Now, London's opening here. Let's see what happens. Got a little short position right here. Right? It has to make sense. All this random stuff is all BS. Does anybody take $1 billion and randomly buy stuff? I don't think so. Poor high, Raj. If you're on the if you're on your skateboard, right? So there's sellers are competing right here, right? There we go. Repaired the poor high, right? That this market's got a little bid in it, right? It's got a little bid, right? Nothing wrong with that. I'm out of that little long. Where did I sell it at? I was long at 2 3/4, and I sold it at 6. That's okay. All just short covering, folks. Yeah, nice work, Phil. Way to trade with the flow of business, right? Nicely done. Yeah, it's nice. I'll be using the new contract at 9 o'clock. So on the old contract, I'm looking for 60/19, 60/20 as a top. Not to call a top, but for the next sort of larger term target. And on the new contract, I'm looking at 60/65 and 3/4. Yeah, just watch the offer, Phil. Life is simple, right? Everything else is complicated, right? The offer is the simplest thing we would watch. And really what that comes from is back in the old days, right? When you bought a stock, right? You knew who took the company public, right? You knew that, say, in Vancouver, it was a mining deal, right? And the mining deal comes out, and say it was the Lundin Group or Hunter Dickinson, right? The big mining promoters, the and these were like respectable promoters. These were people who actually raised money for the companies and did the right thing for their shareholders. But if you saw that their trader was selling, then you wouldn't buy it until their trader moved off the offer. You know what I mean? So knowing when the trader moves off the offer means the supply is being sold at higher price, then it's okay for you to go long, right? That's why you watch the offer. Right, now we're going to backfill this a little bit. Right, this is just a little bit of a sale. Right, we took the price up, that created demand. Now we go back and fill in that demand with supply. Right, this is the back end of the move. So say you're short. Say you shorted it at 8. Okay, you put your stop above these two candles, and you put your bids under 5 1/4, and see if you can get a fill just here, because there's going to be some short covering when you come down to 4. Because what happens is when the market took out that K high, there will be people who were using that as a stop who didn't actually have a physical stop in. And they'll come in and they'll start to bid the market around 5. So if you're short at 8 or 8.5 against 10.5, and you can't buy any product at 5.5 down in these levels here, that means there's nothing for sale. And you have to govern yourselves accordingly. Oh, you're on the new contract, Michi? Cool. Hey, you get that weird activate Windows thing on your screen too. I have that too, where it says in the bottom right-hand corner, activate your Windows. I went to activate it and it won't take. It's the weirdest thing. So that's good market intelligence, right? You took a short, it got stopped out, right? So that showed you where the bid was, so you got to turn around and go long, right? And that's what traders used to do, right? Traders used to short down to the bid and then flip to the long, right? That's why you got to find the bid. And if the bid keeps moving up, that means they're coming for it. That means customers are lining up to buy product. So you don't want to be short when customers are lining to buy product. You want to be short when sellers are putting product on sale. Does that make sense when I say it that way? Jerry, can I ask you a question? You really, really want the short, right? I'm getting a sense that you're like really short biased. Because you're like, can I short here? Could I short here? Could I short here? Right? Remember the Flintstones when Fred Flintstone was trying to stop his gambling addiction and somebody said, okay, Fred, you want to bet? He'd be bet, 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 bet. You're like short, 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 short. You're like wired for the short. Right now, my friend, you're in the front end of the move. The inventory of the overnight session is underneath us, right? Now, just because there's not a long trade doesn't mean you should automatically short it. And this is exactly, I'm glad you brought this up because this is where a lot of traders get into trouble. There might be no trade for you at this time, which kind of sucks, right? But we've all been there, right? Just because you missed the long doesn't mean there's an automatic short. What you want to do, if you really want to learn how to short, had you shorted the eights, like I said, and the market couldn't get underneath 5.5, right? Do you see how it's getting hung up here? Look, just leave it alone. What you do, if you want to learn how to short, watch this offer. Watch the red line, right? Watch the red line and watch it move up and down. As it does so, let me just get rid of this stupid standard deviation. Do you see how every time it comes down to these sevens, it turns tail and goes up? That's why there's buyers here. So why would you want to short into a bid? Do you understand? What you want to do is wait until the sellers start to compete and then short. Spend some time watching that, right? Because right now we're in the front end of the move, right? You don't want to short the front end of the move. That's why people get stopped out. It's got to go lower. It's too high. It's overvalued. Who are you to say it's overvalued, right? If somebody's willing to pay 60.10 for it, it ain't overvalued. I'll sell it at 60.10 if I'm long, right? I'm not going to argue with them and go, "Hey, listen, Jerry, let me put it to you this way. If you were selling a car for $20,000 and somebody came up to you and said, 'Hey, I'll pay you 30 grand for this car.' Would you go, 'No, that's too much money. I don't think you should pay that much.' Or would you just cash the check?" You see what I mean? And right now, you're in the middle of a zone. A look above and fail of 10.5 might work, but remember, there are all these bids down here that you're shorting into. Does that make sense? If you talk yourself through it, you'll see it's not the best time to short. The market's telling you not to short. Does that make sense? The reason you don't see the long is because the price action is screwing with your head. The price action is screwing with your head because it looks like a drunk guy walking up the stairs of the bar. You don't think he's going to make it, but miraculously he does. And that's because of electronic trading, right? No problem. It's a common thing. And I'll tell you a little story why it's really slow, okay? This is how we used to short in the old days, okay? You never shorted unless you knew there was a seller, okay? So if you were on a trade desk at one brokerage firm, Jerry, and I was at the other, and we were buddies, you'd call me up and go, "Hey, JJ, we got a 3 million share sellout on ABC stock," which means somebody's selling 3 million shares that they haven't paid for, or it's a bad financial situation. So they're going to knock the price of the stock down. Now, you don't tell me all that. You just go sell out ABCD, 3 million shares, click, right? So say the stock's at $6 a share, and I know that 3 million shares are going to hit the market. I'll go short 20,000 shares at 6. But, then you're going to start selling and knock the stock down to maybe 5. I cover and I buy drinks that night. Do you understand? But there's no reason for me to short that stock based on a chart. I don't even know who cares what the chart's doing? I know that there's a seller. Do you understand? And during that entire process, I have not looked at the chart. So this way, we don't have that insider information. The chart will actually tell you that insider information. So if you were shorting 10.5 indiscriminately, now you're in a little bit of trouble, right? And see, you're shorting an uptrend. You're shorting, the bid is moving higher, the chasing the offer. You don't want to short that. You want to short when they run out of buyers and then they put it on sale. And the most likely place for that to happen is at the edge of the cost basis. Does that make sense? You never short something unless you've identified a seller. If you haven't identified a seller, there's no reason to short. Or if you haven't identified that sellers are competing and lowering price, there's no reason to short. If a poor high gets traded through, can we automatically long it? If you're a fast trader, you can. If you're really quick and on the ball and sharp, you can. I don't know how much follow through there's going to be on a poor high, so it's a little unpredictable, but it's a valid execution strategy. It's just not an A plus setup because I haven't done it 500 times. I don't know how many times it'll work. I haven't done the work on it. You know what I mean? Right. So yeah, we would only short like if we knew that somebody was a weak stock promoter and they just dumped their stock into the market. That's a good short. If you know that, do you guys know what blocks are? Right? So if the block guys called you up and said, "Hey, uh, XYZ stock, somebody is shopping a 5 million share block at a 40% discount to the current market price," which means somebody's trying to get rid of 5 million shares and they'll sell it 40% cheaper than the current market price. Then they would start shorting it. Do you guys understand? Because you've identified a desperate seller. Do you see a desperate seller here? Do you see anything desperate about the sellers here? We've won from 59.85 to 6,010. There's nothing desperate about it. Hopefully that helps. Right? There's a little front running before that 14 stop right there. Right? So now say you were short. Like say you're a gun to your head. We have the gun to their head shorts, right? The people who short. Say you're short 12, your stop's the top of those candles, and your bid's going to be just under 10, right? Because that's where the candles are telling me the buyers will be, right? So you're short 12, and I'd put a 10 and a quarter, 10 and a half bid in, and if you don't get filled, right? And that's shorting the backfill. This is the backfill. This is the quick sale that brings in buyers, right? The market goes up, then you quickly put it on sale. Attention Walmart shoppers, for the next 15 minutes or 10 minutes, right? Jimmy Dean Franks are on sale. Get them while they're hot. Brings in buyers, right? Attention Walmart shoppers, right? That's what these little red candles are. In an uptrend, these are called backfills, right? And what they are is to induce buying. Does that make sense? Always think like a seller, right? Never think like a consumer. These are the people who make the money. These are the people who spend the money. Think like a seller. Not a short seller, a seller. Does that make sense? Right? So if you were short, can you use liquidation heat maps to determine sellers? Oh man, why would you? You got something about it. I mean, look how simple this is. Why would you want to overcomplicate it? There's a level. The market's offering underneath that level, so sellers are competing underneath it. You see how simple it is, Cryptomania. Why would you? Yeah, but if you listen to me, it would be simple. That's the thing, right? Right? If you just listened, it would be simple. You see the straight line, right? Where's price? Is it below the line or above the line? Like, how much more simple could it be? I don't even know what a liquidation heat map is. Like, not to be rude, but I don't even know what you're talking about. Look for bids here. Spend some time focusing on a 1 minute chart. You will be blown away by how much information if you just keep an open mind. The problem is you need to be able to focus for more than 30 seconds, right? Just keep it simple, man, right? Look, there'll be some bids here at 8. How do I know? Because there was a little activity here, so there's a small cost basis. They'll sell it down to cost basis, and then they'll lift the offer to see if those buyers will pay more. If not, they'll come and they'll take out this here. So if you were 12 short, that's not a bad backfill short, 4 points, right? Well done, right? But you knew your risk. This is the backside of the move, right? There you go, Jerry. There's the backside of the move, right? And you were right. It was right in the middle of the zone. A look above 10 and fail, right? Yeah, I don't even know. I've never even looked at one of those, so I don't even know if you could trade that way with it. So yeah, but why bother when you just have a simple candle chart that tells you that sellers are competing now, right? And everybody's got a candle chart. It's really simple to see, right? There's nothing on it except the level and your offer. Offered underneath that level means it's on sale, right? Just trying to make your life a little easier. That's all, right? Now, in a normal market, we should sell it down to here. Remember 4.5? Right there. Let's see where they bid, where the buyers come in. Because where the buyers come in, we're finding the bid now. Where the buyers come in is where that offer is going to start lifting. My goal for you guys, see? Do you see how the bids came in? Just where that little position is? My goal for you guys is to be able to trade just using some simple common sense and simple charting, right? Where you don't have to overcomplicate everything, spend thousands of dollars on software, go in, make your daily bread, then go enjoy your life. Now, if sellers have to compete, those desperate sellers, they'll start there. See, start selling it lower. But the fresh meat shorts are right here, right, and then here. So there'll be buy orders. Because what is a short? A short seller is a future buyer, right? A short seller is a future buyer. So there'll be bid to cover here, and there'll be bid here. Now, folks, thanks for watching. And I want you to know if you're struggling with trading, if you're having trouble, come and visit us at the Trading Syndicate. Right? We really push hard to teach you how to trade and help you with your process and keep it simple. It's a great community of traders. Use the code there in the description. You know, it's like 50 cents a day, really, if you use the code. And if you're interested in using other people's money to trade, we'll help you pass those evaluations with firms like Apex. And there's a discount code for Apex as well. See how it's kind of rotating higher, right? Because we found buyers. We'll teach you all these concepts in the room. Make your life easier, right? So, how is that useful information? Remember, if you were short 12, your stop was here. As it dropped in, and you saw that it wouldn't take out 5.5, cover. Pay yourself, right? Couple of contracts on 3, 4, 5 points is beautiful. You identify a seller. You identify sellers are competing because the offer is moving lower. You sell alongside with them. You cover when they stop selling. That's what shorting is. Shorting is identifying a seller. Then you identify that the other sellers are competing with that person, right? And then when they stop selling, you cover. So you're short, this is your stop, and your cover, right? There's a business reason for the trade, and if it took out the top of that candle, the business reason for your trade does not exist, so you can't cut the trade. So your risk is defined, right? Your risk means that the business transaction doesn't make any sense. It's not 2 to 1, 3 to 1. It's listen, if there is no seller at 13, why the hell would I be short? Hope that makes sense. Great. Thanks, everyone. Remember, I'll be using the new contract this afternoon or this morning for those of you in the States. Have a great morning. Be safe out there. See you in a little bit. Yes, if you're using 30-minute candles, then you'd be putting the tops and the bottoms of those candles as stops. Thanks, folks. We'll see you in a little bit. Trade smart out there. Bye for now. Ooh, another big short position. Right? So there's another short position. This is the handy thing about market profile. Thanks, everyone.